This is how you could have made $560 day trading the NASDAQ. So if we look at the NASDAQ daily chart going into Friday, December 13th, the first thing you'll notice is that we traded into a 1-day fair value gap, bullish BISI, buy side imbalance, sell side inefficiency. We traded into that and then traded above our previous all-time high here at 706. And on Thursday, we came and retested a daily order block and actually closed on top of it. So this essentially would indicate that we could look for higher prices going into Friday. And so that's essentially gives you a bias going into the Friday trading session. So if we go down to a 1 hour chart, we can look at how the market opened up on Fridays or Thursday night going into Friday. So the first thing you notice here is that we traded back into this hourly imbalance here. There was a 1 hour fair value gap, buy side imbalance, sell side inefficiency. So we can go ahead and mark that. We traded to the consequent encroachment of that, which essentially we could look to potentially use as support for higher prices. And we also took this sell side liquidity that was resting beneath this low that was formed in the Thursday morning New York session. So if we continue to fast forward, you see when the market opened on Fridays for Friday's trading on Thursday night at 6 p.m. Eastern, we had a huge gap up, right? And that gap up essentially took out this buy side liquidity, and we still had this buy side liquidity remaining, as well as this all-time buy side liquidity at the highs. So going into Friday, if we continue fast forwarding this action, you can see we retraced back into the gap, right? We retested the gap here, which was this opening price going into Thursday. So that was essentially our Friday opening price that we retested. And then we continued to trade higher. And then we took out this buy side liquidity. And at this point, the market was pretty bullish. And you could see that it was now targeting this all-time high buy side liquidity, which it took out at 7 a.m. Going into the New York morning session on Friday. So if we continue to move this forward, we can see if we go to a 1 minute chart, we can kind of look and see what this looked like. So here's that all-time high buy side liquidity that had been taken out here at around 7:30 a.m. Eastern. And at this point now, what our pools of liquidity look like were, we had sell side liquidity resting beneath here that the market could target. And we also had buy side liquidity at these new all-time highs that the market could potentially target. So the market continued to trade lower and ultimately targeted this liquidity at the lows, which it went and got here right before the market opened at 9:30 a.m. Eastern. So once that liquidity was taken on the NASDAQ, if you looked at the S&P 500, that same low was not taken on the S&P 500. So that essentially formed the SMT divergence on between the two correlated assets. So from here, now that we've taken this buy side, potentially we could go retrace to take, now that we've taken the sell side, we could go retrace to take the buy side liquidity. So it was just a matter of kind of being patient here and seeing that we do get a market structure shift here once we close above this high, and then we do form an order block here. And if you notice, we also did have a range that we could have used to play off of. From this high down to this low, we formed a range with this being the 50% level here at 810, 21,810. So to me, if the market can get above 810 and come back and retest 21,810 with some sort of discount array, we could target the buy side liquidity at 844. So if we continue to fast forward, you see we come back, retest this order block, and use it as support to go higher. So essentially this tells you that you're now in low resistance liquidity run conditions, right? So the market should continue to go higher at this point. These down close candles should support price higher, and any fair value gaps, specifically BISIs, should stay open to support price higher. So we can see here, the market trades lower, and then we form an order block here on this candle right at 21,810, which is essentially the same level as this discount price, right, at 810. And remember, anything below 50% of your range, you want to be long. That is where you should be buying. Anything above that, you want to be short. That's a premium market. But if we have a long bias, we should be buying in a discount market, right? And so the discount portion of this range is at anything at or below 21,810. So essentially, if you bought here with our stop loss below here, you're risking 13 points to make about 33 points if you're going to sell your full position there. So if we buy here and now we essentially see what happens. See the market trades lower, but we never close below this order block. In fact, you can see we use the 50% level of this order block as support, right? You can see that here. If we put a Fibonacci from the open to the low, we use this 50% level as support to hold this candle. So from here, we really shouldn't see the market trade back down any lower. And you can see we get a huge expansion here running towards this buy side liquidity at 844. And we continue to, now form a 1 minute fair value gap here, a bullish fair value gap, a BISI. And so from here, we trade lower into that, right? But we do not close below the consequent encroachment of that, right? So there's no reason to really panic here. We continue trading lower. We use that as support. And then ultimately, we do go tag this buy side liquidity here at 844, where you could have now took a partial, maybe sell 3 of your contracts there, and then, take your stop loss, trail that up here potentially, right below this down close candle, right? If we're now in a buy program, price should support, but this could continue to go higher. So because of that, we could now just trail our stop for our remaining contracts. And you see, we do get continuous expansion here. So now you can move your stop loss into this little BISI here. That's now should support price. If we're continuing to be in a buy program, we continue trading higher here into 880, which now you could have moved your stop loss into consequent encroachment of this BISI, right? And then we continue trade higher, which allows you to move your stop loss into consequent encroachment of this BISI now. And then from here, we do make another BISI, which we could have now moved our stop above here. And that would not have been stopped out ultimately until here, right? So you would have made easily nearly $600 with 5 contracts of the micro NASDAQ on this trade. So